All right, Elise, thank you. As we head into spring, those New Year's resolutions could be wearing thin. Most of those promises have to do with physical health. But what about your financial fitness? Scott McElmurray with Bank of Little Rock Mortgages is here with what you need to know if your plans involve buying a home this year. Scott, good to see you.
Good to see you.
I had to spread across the weather. Excuse me, I'm a little out of shape. Get to take the vest
the jacket,
off.
though.
Good morning. Good to see you. Thank you so much. All right, so financial fitness also important. We've seen interest rates go up a little bit. So what are you guys advising when it comes to buying a house this year?
Well, there's a few things that you want to look at when we talk about borrowing health. The one thing that a lender looks at is your credit score. So you want to make sure that's in order. You can get a free credit report on typically with one of the bureaus, or you can certainly apply for a free pre-qualification.
Okay.
You're going to want to have a 620. It's usually the minimum score. 740 or better is considered excellent.
Well, let's say you've got one of those lower scores. What are some things you can do to shore up and make that credit score a little better?
The biggest thing you want to do is make sure the accuracy of the report is there, that there's nothing on there that is inaccurate. Now, if everything is correct, there's some things that you can do short term that might improve your score, but typically time is what it takes to increase.
So this is
score.
something you're not going to take care of in a couple of weeks. It may take
not
a little
necessarily,
longer than that.
depending again on how far off you are from where you need to be.
Is the main cause of that having too much debt?
It could be. There's a variety of factors. It could be the percentage of your credit card. That if it's maxed out, for example, you could possibly pay it down even just a little bit, and that has a pretty large effect on your score.
And I've heard that bankers don't like for you to be over 50% full on your credit card. If you've got a limit of $2,000, they don't like you to be over $1,000.
That does have an effect on your score, absolutely.
All right, employment. It's always good to have a job when you're looking.
It is good to have a job, and it's actually necessary. One of the things that some things you want to avoid is switching jobs in the middle of the process, though. That can certainly complicate things.
So if you stay at a job for a long amount of time, it actually is a positive. Oh, this person is stable.
Oh, absolutely.
The situation is stable.
Right, exactly. If you're self-employed, that doesn't really hurt you, but make sure you have got your tax records in together.
Okay, so self-employment doesn't hurt you. I've heard that it might be a little bit more difficult.
It's a little bit more difficult because you are using tax returns. So as people try and write off as much as they can, that lowers their income, and so may lower the amount they can qualify for.
One final question when it comes to getting that mortgage: 15 compared to a 30-year note.
15 is always a lower interest rate, so you pay less money, but it's also a higher payment. So
okay, some things to consider. Scott McElmurray, Bank of Little Rock Mortgage.